Welcome back. You're watching Market Fatafat on ET now, and let's talk about all the stocks that are buzzing on news flow and technicals. And talking about technicals, now we have Nirav Chheda joining us on the show. Very good afternoon to you, Nirav. Thank you so much for joining us on ET now. The first stock that you're going to talk about is Kotak Mahindra Bank. How do you see this one on the charts now?
I think it's Karnataka Bank and not Kotak. So I just talk about both of them, so viewers can have a view for both. See, Kotak Bank at this point, I do like this bank even more. Why? Because it is near the lower end of its consolidation, and the consolidation was in between 1690 to about 2000 odd levels. And it is near that lower band. So you can keep a stop level 1680 and go ahead. I really like this bank as well and look to buy for that target of around 2000. However, my call today was for Karnataka Bank. You've been seeing a lot of selling in Nifty. I think this is the last leg of the fall, and I'm looking to pick stocks which can go up aggressively. Most of the stocks will move up. So, which stocks will go up aggressively? And this is one of the few stocks which I really like. Why? Because it has witnessed a 15-year breakout, and post this breakout, no doubt the stock has come up. But now, in the last couple of weeks, the stock has come down from 255 odd levels. In fact, in the last 3-4 days only. So it's near the support of 220 odd, which is a very important support for this particular stock. You can keep a stop loss of 218 and go long in this, because this stock will give you good beta. Probably it is going to move up towards that 270 to 75 odd levels in the coming time. You can get a good return coming out.
More the merrier, Vinny, isn't it? Because we wanted to talk about one stock, but luckily now we have Nirav talk about two banking counters and how they are looking on the charts.
Absolutely. Two counters coming in, Kotak Bank as well as Karnataka Bank. That's for our viewers first. Two stocks from Nirav. But let's move on to talk about car trade and why this one is in focus, because car trade has announced that they will be shutting down the auto sales division of the recently acquired unit OLX India Private Limited. Now, owing to the challenges faced by with its unit economics, that's the main reason for them shutting down. Now, car trade said that its wholly owned subsidiary Subek Auto India Private, which houses OLX India's business, has made a strategic decision to shut down the C2B operations of the auto transaction business and reduce the human resources as well. As of now, obviously, the stock is still holding on to gains. 2% gains, more than 2% gains is what we're seeing for car trade.
All right, moving on. Let's talk about Vedanta Vamakshi, and why is this one in the news today?
Well, Cheryl, a couple of factors here why Vedanta is in focus today. Well, the first one being that it has rehired Ajay Goel as its Chief Financial Officer, and this has come in ahead of the company's ambitious corporate restructuring plan. Goel will be returning to Vedanta, which he had quit only about 6 months ago, and he will be appointed with effect from 30th of October. He will be helping with splitting the metals firm into 6 listed companies as a part of the restructuring process. Now, not just that, another factor that is driving Vedanta in the trading session today is the fact that China has boosted support by issuing additional sovereign debt as well as raising the budget deficit ratio. So that is the reason why not only Vedanta but a lot of other metal stocks are also on our radar as of now. But Vedanta is still in focus. The company has rehired its CFO Ajay Goel, and that is the reason why the stock is in focus today. As of now, the stock is holding in the green with gains of around 1%.
All right, moving on. Let's talk about the sugar counters. All of them are abuzz in today's trading session. You have the global sugar prices that have hit, in fact, a 12-year high. So take a look at what Balrampur Chini, Dwarike Sugar, Dhampur Sugar, Sri Renuka all are doing. They're actually holding on to good gains. Even EID Parry was holding on to good gains earlier on in the trade today. Most of the stocks were trading higher, about 2 to 6% or so. You saw the global sugar prices actually hit a 12-year high. On Tuesday, we were shut for trading on that day, and this is on back of the supply tightening. You have International Sugar Organization saying that 2023-24 global sugar production will fall by 1.2% on a year-on-year basis, and lower sugar production is likely to sustain upward trajectory in the domestic sugar prices, is what brokerage analysts in India had to say. Also, remember, the rise in sugar prices is also due to the extension of the export curbs by India, which was done last week. So on back of that, you can see that the sugar counters are abuzz in trade. Some of them have given up some of those gains, but you have most of them that are still holding on to the positive territory, Vinny.
Okay, those are the sugar stocks that have been in focus. But let's come to Nirav. And Nirav, you picked out HDFC Bank. Now, you did speak about Kotak Bank. So, what are the charts for HDFC and Kotak? They are similar, or maybe a different story for HDFC Bank?
It's a different story at this point, but I mean, both are likely to move up. I like HDFC Bank more. Why? Because this stock has finished its consolidation, and this stock is near its support level of 1500, 1480 odd. While Kotak is a little far away from its support, about 40 odd points away. HDFC near the support and ready for a bounce. Also, open interest wise, HDFC Bank has witnessed a lot of short covering action. It continues to witness covering of short, which is a good sign. The stock can move up towards the 1600, 1620 odd levels in the coming time, probably very soon. So look to buy the stock at current levels with a small stop loss of around 1470.
All right, that's the take coming in on HDFC Bank. Ramashi, KPI Green, why is this in the spotlight?
Well, Cheryl, this stock is in the spotlight today, and that is on the back of an order win. The company has announced that they have received an order from Sustainable Spinning and Commodities. Now, this is for execution of wind solar hybrid power project. Now, this comprises of nearly 4.2 megawatts of wind as well as 3.6 megawatts of the solar capacity. So, largely, the stock is in focus on the back of an order win that has come through. The share is definitely reacting to that. The stock is gaining away in trade today. As of now, the stock is up nearly 1%.
All right, let's put the spotlight on the entire metal pack, and the metal index had actually snapped a 4-day losing streak. It's among the top sectoral gainer in today's trading session. And why such a move coming in the metal counter is because China has moved to introduce fresh infrastructure stimulus, and that lifted the investor sentiment on the earnings prospect of domestic metal companies. The Chinese government has said that they will raise 1 trillion yuan by issuing sovereign bond to support the infrastructure in the regions hit by natural disasters in recent years. And the move is part of Beijing's plan to boost growth by increasing the budget deficit by a deficit ratio to about 3.8% of GDP from 3% that was set in the month of March. With China already being one of the largest metal consumers and producers in the world, the infrastructural push will further raise the demands for metals and thus increase prices. And as a result, the metal stocks in the domestic markets have actually seen an uptick. So you have a lot of brokerages that are saying that this particular move coming in from China is a sentimentally positive when it comes to the Indian metal space. And that's one of the reasons why, as you can see it on your screen, the metal index is seeing a sharp uptick. Hindalco, Tata Steel, JSW Steel were among the top gainers on the Nifty as well. And you have all of them actually snapping their losing streaks as well in today's trading session.
Okay, let's move on and talk about BEML then on the charts. And Nirav, when you look at it, yes, 6 months, last 5 months actually to be precise, they've seen a sharp run up. And then the last 5-6 days, we're suddenly seeing a sharp fall coming in BEML. What are the charts now indicating for BEML? Because last 5 days, it's fallen almost 17%. Should one actually wait and hold on to this one, or maybe book some profits out of this?
Yeah. So, at this point of time in the markets, I'm looking at stocks which can now, run up quite significantly from here and give good returns. So I've picked stocks even though they're down. I believe these stocks have got very good breakouts and they're retesting their breakouts, and that is what BEML is doing as well. This stock got a breakout around that 1850 odd levels, and it had gone up towards the 2700 levels, came down again. It is retesting its breakout, but overall chart pattern is still positive, and I believe it is near the support areas now. So this stock can actually move up from here, and probably in the next couple of days you will see a good rebound from this stock, and it can come up towards that 2200 odd levels at least. So at this point of time, look to buy this stock at current levels. Your stop loss should be around 1940, and possible targets. In fact, it can rebound the whole 100% retracement odd. So the first target would be 2200, and probably it can go up towards 2600.
That's the take coming on BEML. Just a quick look on what the markets are doing actually, because we've seen about a 70 points recovery coming in on the Nifty from the day's lowest point. No doubt not that meaningful when you look at the quantum of fall that's actually witnessed through the course of the day. But yeah, 70-point recovery coming in on Nifty. And some of the names that have actually recovered in the last 15 minutes or so. One of them is Shree Cement. It has jumped about 1% or so in the last 15 minutes. You have JSW Steel that's building on to gains. HDFC Life is another counter that has actually recovered in the last 15 minutes. Also, you have Indus Towers and HDFC AMC and PNB also. That one also has recovered over the last 15 minutes or so. So, Vinny, some sort of a recovery trying to make its way. Hopefully, we are able to actually recover most of the losses. In fact, shut above the 19,200, isn't it?
Absolutely, hoping for that, but let's keep an eye out on what actually happens over there. But as of now, 70-point recovery, like Sharad mentioned. Let's move on and talk about the next stock that is buzzing in trade. And Anush, you picked out PNB Housing for us. What's the news for you?
So PNB Housing Finance has reported positive quarterly results with an increase in revenue to 1,778 crore, showing a growth of 5.5% on year-on-year basis. Profit after tax stands at 383 crore, showing a substantial increase of 46%. Now, despite of this positivity, stock is trading in red. But if you see the charts, stock seems to be trading around its upward sloping support trend line, and stock has given 4 bounces from this support trend line in last 5 months, which is a positive factor for the stock. That's the reason why the stock is in focus today.
Alright, that's PNB Housing that is in focus in today's trading session. But on that note, we slip into a break on this edition of Market Fatafat. More stocks to discuss on the other side. Don't go anywhere.
Welcome back, and you're watching Market Fatafat on ET now. Let's keep it going with all the stocks that are buzzing in trade on the back of news flows and technicals. And the next one that is in focus on the back of news flow is SBI Cards, and that one is because we have the card spend data that has come in. Now, card spends had declined ahead of the festive season. The credit card spends declined by 4.2% on a month-on-month basis versus a growth of 2.7% in the month of August. Now, when you look at it in terms of the contrast for new cards, the additions improved actually during the month of September. Spendings reduced, but we are seeing an improvement coming in terms of the card addition. New cards that were added stood at around 17.4 lakh versus 14.1 lakh in the month of August. And overall, new card addition was supported by strong growth across all major players as well. And SBI Cards addition was the lowest among the private and PSU players. Let's keep an eye out on this one. Today, a bit subdued in trade, holding on just to gain the 0.1% as of now.
Alright, Nirav, let's talk about Bharat Forge then. And how is Bharat Forge looking to you on the charts? We did speak about BEM a short while ago, but Bharat Forge, anything striking in this one?
So, this stock, this has been a slow stock for quite some time. Just recently, the stock has given a breakout about that 1,000 mark, which it was not breaking for the past 6-7 years, and finally, a multi-year breakout has come in. So definitely, I believe this stock has the legs to move up again from current levels. A good support area is in between 1020 to 1000 odd levels. So look to add this stock at current levels and on some declines. Your stop loss would be 980. I believe the stock can move up towards that 1200, 1250 odd levels. The overall chart pattern is still positive.
Alright, moving on then. Let's talk about NTPC, among the top losers as well in today's trading session. If you look at the stock, it fell as much as 3.5% last time I checked. Let's check the stock price right now. 1.9% downtick coming in for that one. Bernstein has come out with a report. They're seeing the separate listing of renewables to be a big risk, not only for NTPC, but also for India's aspiration to add about 500 gigawatts of renewable energy by 2030. The government's aspiration is to add 50 gigawatts per year of renewable energy, which requires more than $25 billion capex per year, is what Bernstein has written in the report. And they're saying cash from NTPC's thermal plant can fund renewable capex, which becomes very complex on a separate listing. However, they've retained the outperform stance on the counter, but they've set a target price of around 274. But yes, the commentary coming in from Bernstein is not that positive for NTPC. Therefore, the stock is trading lower in trade today.
Okay, let's move on and talk about agrochemical stocks, Mamakshi. Which are the names that are in focus and why are they in focus?
Well, a whole host of counters such as Aztec Life Sciences, UPL, Aarti Industries in focus today, and that is because of a commentary that has come in from one of the global players. Now, FMC, which is an agri-chemical supplier, has yet again slashed its 2023 guidance amidst challenging global agrochemicals environment. They've gone ahead and downgraded their ratings. In fact, not just ratings, their revenue for 2023 Q3 by nearly 13% and adjusted EBITDA by almost 26%. And the management had actually cited global destocking conditions are expected to persist into the next year as well. And this, in fact, signifies significant pressure on agrochemicals is expected to continue in the medium term. So all in all, that is a bit of negative commentary coming in from a global agrochemical suppliers, and that not only has implications on its own stocks but also counters like UPL, Aztec Life Sciences as well as Aarti Industries. So on the back of that, we are seeing all of these counters under pressure as of now.
All right, moving on. Nirav, let's talk about Divi's Lab and how is this one looking on the charts to you?
So, this is one of the few stocks which hasn't done anything in the last, 2 years. Definitely it has come up from 29, 28, 50 odd levels up to 3800 levels. But then, in the last 2-3 days, you're seeing a big fall in this stock. This is now approaching its 200-day moving average, which is around the 3380 odd mark, which is not very far from where it is right now. So I believe this stock can witness a good bounce from its 200-day moving average, and this is a good defensive stock to hold in your portfolio when everything is falling. This stock will actually move up. So I believe one can look to buy the stock at current levels. Your stop loss would be around 3340 odd, and you can expect 3800 to 4000 to come in.
3,800 to 4,000 to come for Divi's Lab. That's the word coming in from Nirav. Nirav, we're going to come back to you. Kirloskar Oil Engines. When you look at this one, last 5 days, a slight bit of a correction coming in here. Is it a good time to enter the stock?
This stock, again, I was looking at multi-year breakouts, and this is another stock with multi-year breakouts. After 2018, this is the first time, this stock is above that 455, 460 odd level. So the overall pattern is very positive. It is just consolidating now because everything is falling. This is also falling. I don't think there will be a bigger fall coming in this stock. It has now come near its support of 524 or 520 odd. You can look to buy this stock at current levels. Your stop loss would be around 500. I expect this stock to move up towards that 625, 650 odd level.
All right, so that's the take coming in on Kirloskar Oil Engines. But on that note, thank you so much, Nirav, Sumit, as well as Vamakshi and Ansh for joining us on the show, taking our viewers through all the stocks that are buzzing in trade. But not just that, we have another ET Now exclusive story and a stock that will be in focus, and that will be GAIL. Sources have told ET Now that GAIL is in discussion with Tata Steel and Vedanta. This is for the supply of LNG. My colleague Prakash is here with all the details. Prakash, over to you.
Yes, we are learning from our sources that the GAIL is in talks with Tata Steel and Vedanta to supply LNG for their steel plant. So it's an important development coming in, especially in the context of energy transition. Sources are saying that the GAIL has offered to supply LNG on a long-term basis at assured prices. Companies have started initial discussion, and terms and conditions are being finalized. We are also learning that LNG will be supplied to Tata and Vedanta steel plants located in Jharkhand. In fact, GAIL is looking at various opportunities to supply LNG to the steel companies where a pipeline is available. In addition to that, sources are also saying that the GAIL has offered to supply 3 to 5 lakh CBM of gas on a daily basis to these companies, and that could be increased in a phased manner. Other than that, sources are also saying that supply of gas will be made through long-term contract of 5 to 25 years, and GAIL will offer help to these companies to modernize their steel plant in order to increase consumption of gas.
Okay, thank you so much for that, Prakash. But with that, we are absolutely out of time on this edition of Market Fatafat on ET Now. It's a goodbye from Cheryl, myself, as well as the team who put this show together.